How's it going, guys? Just wanted to do a quick little supplement video to the supply and demand trading, and this is from a larger supply and demand trading, which I'm going to be putting out on YouTube soon. But I just wanted to talk about getting out of retail habits, and if the market is really against you. Everyone says the market is against you, and is it really against you? It is designed to take your money, but you don't have to be the person that is getting scammed, so to speak. So the main thing you have to know when you come in to the market is that for every buyer there's a seller, right? When you're selling a stock, you have to ask yourself who's buying it. Oftentimes you're selling at a loss into areas of demand where someone else is waiting to buy it for cheaper, right? When you're selling a stock, you're selling it because you think this isn't going to go any higher, I need to get rid of it, and someone else is buying it because they think it's going to keep going higher. And consequently, you might be buying a stock because you think it's going to keep going higher, but someone else is selling it to you because they think it's going to go lower, right? When you're buying a stock, you're often buying into supply zone where someone else is selling it to you at an inflated price, all right? You're buying into selling, or you might be selling into buying. So is the market really against you? How many times have you said or seen someone saying some version of this? Every time I buy a stock, it tanks. Every time I sell a stock, it skyrockets. Oh, I just sold my stock, everyone, so I'm sure it is going to moon tomorrow. I suck. I can't ever be on the right side of the trade. Oh God, why me? I can't believe Wall Street Bets was wrong. Right? And I've been there, and mostly it comes down to your own psychology and not fully understanding the market or the chart. All right? If you're consistently making bad trades, more than likely it's not because the market is doing it to you, you're doing it to yourself, right? You need to change up your strategy or your style of what you're doing. I've even seen a few people like completely don't know each other, and they've kind of told me like someone at my broker is making sure I can't win these trades. And I had to kind of tell them like, look, man, you're just not important enough in life. The harsh truth of it is you're not important enough for them to really be worrying about that. All right, they're not putting extra man hours into making sure that you don't make that extra $100 or that extra $1,000. It's the psychology that it must be something else that I can't get my account up. It can't be me. You have to be honest with yourself and say, no, I need to change up what I'm doing. All right. The reason the stock jumps after you sell it is because you're selling into an area of demand. And those pesky institutions or professional traders are waiting to buy your orders for cheap to ride it back up. All right. Retail traders provide liquidity for institutions. All right. If institutions are long stock, long Apple, and then they want to start selling shares, they're not going to sell it to the other institutions because they're long too and they need to sell their shares. They're selling it to everyday retail traders that don't really know what they're doing, and they think it's going to keep going up and up forever, so they start buying up at these high prices, and the institutions are just unloading it to them over however many days, weeks, hours, whatever the case may be. So just to put it in perspective for you, is the market against you? Let's take a look at this chart. All right, you got lower highs, downward pressure, it's underneath the moving averages. Do you buy here? Do you miss it? What's the move? What if you're in the trade and you're down a lot and you need to follow a risk management plan and cut losses, right? I mean, be honest with yourself. You ever just seen this thing dumping, and you're like, I'm getting out. That's it. I don't want to take this loss. Maybe you bought it at the open on this candle and then it just hasn't gone up. So you decide you're going to sell, right? And sometimes it's, you got to follow your plan. And I'm not saying hold a loser, but if you understand supply and demand in the market, you can see what happens, right? Oh, I'm down so much, I have to cut my losses. What happened next? We hit this demand zone, an area where there's going to be buying pressure, potentially, and boom, this thing goes up and goes to make new highs on the day. This was an old NASDAQ futures chart. But you can see how when you're looking at it, real time, this might be all you see, but there's demand here. You can at least hold it, or B, if you're not in, you can start buying it. Or if, let's say you're looking, you're like, oh, I want to short this thing. I don't want to short into an area of demand because it's more than likely going to bounce. So that's a little perspective for you. I think a lot of times you get caught up if you don't understand, if you don't have everything mapped out, you can't make the best decisions, and you might end up selling or shorting here and making a bad trade when you should be doing the reverse, right? This is selling that is being bought into new highs. So you want to get out of your retail habits, right? You sell your shares at a discount to institutions, you ride the wave back up. You gotta ask yourself, if your dream car's price cut in half, would you not try and buy it? Yet in the market, our shares drop in price and we sell it to someone who's literally gonna buy your dream car with the money you just gave them. All right? It's like, yes, this is selling off, but in this case, it's a discount, right? You're getting it for cheaper. So we're so conditioned, and this is the biggest point of this video to put in perspective for you. We're so conditioned to take losses in life, right? You buy a car and you're instantly down. You buy $1,000 phone, you trade it in next year for a $300 credit, and you buy a new $1,000 phone each year, and you repeat the process, right? You ever buy Xboxes or computers or anything, like you always either lose the entire value or you resell it for cheaper. Like we never, our day-to-day life, we never buy appreciating assets, right? You're always buying things that you're gonna lose money on if you ever want to get rid of it or trade it in or sell it. When it comes to the financial markets, you don't need to take these L's. You can be the house. You can be on the right side of the manipulation and take advantage of it. All right. I've been in trades where I'm down like $50 and I'm like, I'm just gonna cut the loss. I don't want to see red. I want to be down $50. And then the next hour, the next day, it's like back up double or triple, and you're like, man, I didn't even need to take that loss. Why did I cut it? I just cut it because I'm used to losing money, and I just, another $50, whatever. You know, sometimes it's more than, another $500, whatever, because you're just so used to taking losses. So you want to recognize that when you're trading, and don't make those mistakes, and don't jump the gun. All right, you want to trade like an institution. You have to start buying where you would be selling, and selling where others are buying. All right, here you'd be selling into a demand, and you should be buying it at a cheaper price. But what these zones give you is the conviction to hold and the confidence to enter. All right, think of it like you won a Ferrari and then you try and sell it for half the price. Does that make sense? You know, you go into a stock, you know, it's like you buy a house one year and then the next year the market is down and your house is worth less than what you paid for it. You're not going to just sell it because the market temporarily said it's cheaper. You know, same thing with stocks. Like, the stocks are going to come down, and that doesn't necessarily mean that they're losing their entire value. You just have to trade the entire market and understand what's going on. And I'll put a little link up top right now for the original supply and demand video. I'll be putting out a more in-depth version soon, but this is just a quick little how to trade like an institution, and just to understand the mechanics of the market so you don't trade like those retail habits and make mistakes that you don't need to be making. All right, till next time.